Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. Today is Monday, June 7th, and this week we have a very special episode. First off, we want to announce that all new loans originated as of today, and that includes B2X and Bitcoin-backed loans, will now have an interest rate of 9.5%. And a 2% admin fee still applies. And of course, we're going to be going deep into the market dynamics that make these changes possible. As well, we're going to talk about stablecoin market capitalization, which has more than tripled so far in 2021. And of course, we're going to be talking about El Salvador's move to potentially make Bitcoin a legal tender and the implications that that can have in the industry at large. And of course, we also have inflation data coming out of the US this week. We're going to talk about what we can expect and when that data comes out. So lots to cover today. Grab your coffees. It's going to be a good one. And as discussed, to start today, we want to talk about our new interest rates for new loans as of today. And just to recap, so starting today, we're cutting the interest rates, the annual interest rates on our loan products from 12% to 9.5%. All other terms remain the same. And of course, you'll still be able to repay your loan at any time without penalty. Including our 2% administrative fee, this puts our all-in rates for our loans at 11.5 APR. That's less than 1% a month all in. Just like our savings rates, our loan rates adjust to market conditions in order to pass great rates to our clients while ensuring that they are sustainable for our ongoing operations. Next, we're going to be diving into the market dynamics that have led to this change and enable us to offer even more competitive rates to our clients in the following section. Now, as we typically do, we like to go over the market dynamics that lead to these changes. So there are several factors at play that lead to Ledn being able to source capital at a lower cost in the current market conditions and pass this benefit to our loan clients. We'll be covering a few of these, mainly more USDC holders are now looking to earn interest, more institutional investors are now looking to finance Bitcoin-backed loans, and the current compression in alternative market opportunities is making financing these loans all that more compelling. So first, let's break down the more USDC in search of yield. The chart that you have behind your screen right now is the market capitalization of USDC from September of 2020 until now. The market capitalization of stablecoins in general has grown more than 3 times, so more than tripled, from around 29 billion in January to over 100 billion in June 2021. Now, if we look closer into USDC, we see that at the start of the year, it actually had a market capitalization of around $4 billion. Today, the market capitalization of USDC is at $23 billion. So that's more than 5 times. It's grown by more than 5 times in the 6 months so far in 2021. The balances in our USDC savings accounts have seen a similar trend. This means that there are more USDC available at Ledn and at other institutional venues looking to earn interest. This growth in supply has made financing Bitcoin-backed loans or financing for Bitcoin-backed loans more easily available. And Ledn's scale and operational track record also provides negotiating power that we are able to leverage in the benefit of our clients. All this to make our loans more competitive as the market conditions permit. So that is to summarize the USDC dynamic. Now let's talk for a second about more institutional investors looking to finance Bitcoin-backed loans. And for that, we want to pull a few headlines behind your screen right now. And so to talk just at a high level here, as we've mentioned in previous episodes, Ledn's loan loss ratio of 0%, as well as the size of our active loan book, makes it an extremely attractive counterparty to numerous financial institutions. As a result, several industry players now compete in a bid to finance our book at a lower cost of capital. As you can see from the headline behind you, there are now several large institutions in the US that have now taken an interest in Bitcoin-backed loans, and Ledn can take advantage of these market conditions to negotiate better rates and terms from institutions and pass these benefits on to our clients. Just to pull another headline so that you can see it, it was now first signature, now Fidelity. But again, as you can see, several institutions recently have been looking to enter the space and earn attractive returns by offering to finance experienced operators with open Bitcoin-backed loan books such as Ledn. So that kind of covers the increased institutional appetite for these types of products. And then lastly, let's move into the compression and alternative market opportunities. So for that, let's pull out the chart on the the futures implied basis on the CME, which we'll put here shortly. Here it is. So what you're seeing in the screen is the Bitcoin futures implied annualized rolling 3-month basis. And what you see here is essentially going back to the potential returns of this trade of selling the future dated Bitcoin contract and buying spot. So as you can see here, the Bitcoin markets used to be full of these high yield market neutral trades, such as the now defunct GBTC premium trade, which we'll find, here's the GBTC premium chart. As you can see, this chart went from being in essentially a sustained premium down to a discount. So while it was at a premium, this was a very popular trade around institutions. Once it went on the discount, obviously the attractiveness faded, and now the interest has now moved on to the interest basis or the basis trade, which is selling or buying current Bitcoin and selling the future Bitcoin and carrying it to make that difference. So if we look at the futures basis trade, essentially buying today's Bitcoin and selling the futures contract, as we were showing earlier, this would be the implied return of that trade in the CME. So as you can see, this trade used to be at around north of 10% for the most part of the year. As of April this year, it has essentially now come down quite significantly, and it's now trading between 0 and 5%. So again, this trade has now become less lucrative, and it's making other options in this space more attractive. So essentially, when this trade is basically yielding approximately between 0 and 5%, it makes high single-digit interest for lending against Bitcoin way more compelling. So with that is essentially a summary of the market dynamics at play that allow Ledn to essentially earn or get better cost of capital in the current market conditions and pass that through to our loan clients. And now moving on to our Bitcoin price commentary, we see that Bitcoin continued to find buyers in the mid 30,000 levels, and the price ended the week at $35,808, up just 37 base points. Of course, the news heard around the world this week around Bitcoin was the fact that El Salvador's president, Nayib Bukele, has put forward a bill to let El Salvador become the first country to accept Bitcoin as legal tender. The development, as you can see from the headlines behind you, had networks from CNN to Al Jazeera all covering the news. And just switching back to the chart for a second, we see here that from a technical standpoint, the formation that we're seeing in Bitcoin is not quite favorable. As you can see, and I drew these lines here so just to make the reference. As you can see on the way up, we saw it form what's called a bullish flag. So essentially here is the mast of the flag, and then here's where essentially the flag will sit. And typically these formations tend to continue to the upside. On the downside, we're actually starting to see the formation from a technical standpoint of what's called or referred to as often as a bearish flag. So the opposite of this. And typically these flags tend to do a downwards continuation. So wanted to highlight that here because it seems to be a pattern that a couple of people in the market are paying attention to, and it could essentially influence short to midterm price action in the coming weeks. Looking at the futures markets, we see that the open interest for futures has essentially settled back at levels near where they were in January. So this is the chart that you have here. As you can see in January, like the open interest was around 11 and change billion. Right now, we're exactly there. It's essentially 11.3. Makes sense since the price is actually trading right around the same levels. It will be an interesting week on the back of so many positive developments in the macro side for Bitcoin. We expect that more conversation and headlines around El Salvador will come out this week as politicians and regulators essentially start to digest the potential implications of this development. Moving over to the S&P 500, we see that equity markets are continuing to find comfort in stable bond yields and a stable dollar. If we look at last week's S&P's action, it closed the week higher by 56 base points at 4,229 points. And as we were just highlighting on the yields on the 10-year, we see that they've been essentially flat all the way since the beginning of April. And looking at the dollar index, again, pretty flat over the last 14 days. So as we mentioned, equity markets seem to be finding comfort in that and being able to kind of grind a little bit higher. As we said, both the 10-year yield and the 30-year yield for the US Treasury bonds dropped by more than 1% last week, and they settled at 1.56% on the 10-year, as we said here, 1.56%, and at 2.23% or 2.24% for the 30-year bond yield, respectively. And the US dollar index, as we saw, was pretty flat, moving just 9 basis points higher last week. Now, checking in on the Russell 2000 index, and this is a index that we've been looking at, as was highlighted by fund strat manager Tom Lee, and he was looking at this very key level of 2293. He wants to see a weekly close above this level, which in his eyes would be a confirmation of a broader rally higher. Now, as we see, last week we got pretty close after it did look like we were going to break south after that formation. We did gain some ground, and last week it closed very, very close to that level at 2286. We're actually seeing it higher above that 2293 level this morning. So it'll be very interesting to see if this week we can actually see what Mr. Lee has been waiting for so long. If that happens, this could be a tailwind for Bitcoin and the innovation/tech investments, which have recently suffered at the expense of energies, commodities, and value stocks. The reason why we think that is because, as Mr. Lee highlights, when this index breaks higher, in his view, this was highlight another leg higher for the market, which, as many say, a rising tide should lift most, if not all, boats. Now, going back to the Fed, which again, a lot of attention is on the Fed right now, we have a quiet week on that front. Not a lot of speeches out of the Fed. In fact, no speeches this week, but we do have very important economic data out of the US this week. On Wednesday, we get wholesale inventories, and it'll be interesting to see a surprise to the upside in these wholesale inventory numbers, which would validate the thesis that some companies are overstocking right now, trying to plan for this very high demand that they're all expecting. On Thursday, we get initial and continuing jobless claims, which are very important given the Fed's focus on unemployment, as well as the all-important consumer price index reading for May. All of this data comes out at 8:30 a.m. on Thursday. Thursday continues to be a big day because we get the federal budget at 2 p.m. So again, look for Thursday to be a decisive day in equity markets. Moving over to gold, we see that after 5 consecutive weeks of gains, gold finally saw some red last week, closing down 67 base points at $1,889 per ounce. Interestingly, we see that this candle, the weekly candle, although it closed lower, it continues to make higher lows. And by higher lows, it means that there is no weekly close below the previous one. That's a pretty good sign from a technical standpoint. And, just to talk about gold for a second, the biggest catalyst for gold might be this Thursday's upcoming consumer price index announcement, because it'll basically give us a bit more updates on inflation and how that trend is developing. Moving over to the DeFi index, we see that the index actually held ground and bounced back last week, closing higher by 9% at 10,004 points. Ethereum, on its side, also had a pretty positive week, up 13.41% at $2,710. Interestingly, we're starting to see DeFi and Ethereum leading to the upside again. They are, relatively speaking, bouncing higher and seeing a bit more buying interest than Bitcoin, at least right now. We've seen this before in last summer's rally, to highlight that period. However, this time it does feel a little bit more real. And we're going to go into some detail as to why we feel that way. One of the reasons is essentially, as you can see in the back of your screen, this headline from last week is from the Wall Street Journal. And what this highlights is that Ethereum and DeFi are continuing to take share in the mainstream media narrative. And by now, a large percentage of the traditional finance crowd knows what Ethereum is, and that largely it powers decentralized finance protocols. Another example of such media coverage is this one here, which is, there's a lot of talk about Vitalik now and Elon Musk. Elon Musk has been doing some tweets essentially mentioning or highlighting Ethereum. And so again, this just continues to captivate traditional mainstream media and earns a lot of media, a lot of headlines. And so this is essentially taking some bandwidth out of the minds of traditional media folks. Now, as we've mentioned previously, the stablecoins or the stablecoin world has increased by more than 3x so far in 2021, with USDC increasing by 5x so far into 2021. And the investments in the decentralized finance space continue to grow. One such example is this recent announcement by Solana, which is a blockchain that is reportedly raising $450 million. For context, this is one of the blockchains that USDC runs on top of. So USDC is a stablecoin, and it actually does run on more than one chain. Solana is one example, and as we can see, these types of networks continue to rally investor interest. Now, switching gears a second to look at some more of the broader crypto market headlines. A very interesting data point that came out last week, which was, among other market health signals, trading volumes for crypto at an all-time high right now. As you can see from this article from the block, it mentions that volumes surpassed $2 trillion in May, making it the fourth consecutive month where the exchanges in the industry traded volumes for over $1 trillion. And I just wanted to highlight that and put that into context for a second, because it's quite impressive that crypto trades essentially the equivalent roughly of its market capitalization in 1 month. And it's been doing this for over 4 months now. To keep things in context, right now, Bitcoins and crypto in general are between the range of $1 to $2 trillion in market capitalization. And in May alone, more than $2 trillion were traded. The last 4 months, over $1 billion or $1 trillion has traded in each month. So that is quite impressive. And to put it into context with gold has a market capitalization of around $10 trillion and trades approximately $4 trillion a month on average, according to daily traded volume data from Statista.com. So just comparing it to gold, crypto is essentially trading 2 times more often than gold relative to their market cap. So again, very impressive data to keep an eye on. And lastly, moving to our mining difficulty commentary, not much to report on this front since the next difficulty adjustment is on track to essentially come in next week, and it's projecting to bring difficulty down by about 8%. Looking at the mempool looks really clear, and it's allowing for some very cheap and fast Bitcoin transactions at the current time. As of the time of writing, you could get into the next block by 1 sat per VByte. You can still get into the next block at 5 sats per VByte, which is very, very cost effective. It doesn't really get much cheaper than that. Lastly, looking at the Taproot signaling update, we're seeing that support for Taproot upgrade is locking in support for this Taproot upgrade in this mining epoch is very much still at play. We see that the current signaling ratio is at 97.88%. And again, if we finish the epoch with a signaling ratio of over 90%, we will be moving forward with the next stage in this upgrade. So very, very exciting. Continue to support Taproot, and we're very, very pumped to see this upgrade actually get processed or get pushed.